accounting today. And here's the twist. We're not just talking debits and credits. We're talking about how the digital world, with all its platforms and subscriptions, is shaking things up.
It's really interesting how it's not just about the numbers themselves, but how our whole understanding of value is changing. Accounting has to evolve with it.
It absolutely does.
Yeah.
And to guide us on this deep dive, we're turning to a blog post by Gabriel Budino.
Oh, great one.
Yeah, it's called Di Todo Un Poco, La Contabilidad en Tiempos de Plataformas y Modelos de Suscripción, published just last week, actually, on September 9th, 2024.
Very timely, because Boudinho really emphasizes that going digital isn't like a choice anymore, it's the reality for businesses of all sizes. And of course, that has huge implications for accounting.
Huge is right. One thing that really struck me was how he describes the modern accountant as a strategic advisor. It's a far cry from someone hunched over a calculator.
Totally different. Because think about it, in today's world, data is everywhere. We're practically drowning in it, and someone needs to make sense of it all. And that's where accountants, especially with the right digital tools, can analyze that mountain of data and turn it into, well, actual business strategies.
Okay, so let's unpack that a bit. What would be an example of a strategic question an accountant might help answer in today's world?
Let's say you're a business on a platform, like Amazon, for example. An accountant could analyze sales data, but not just to see what's selling well. They could figure out the most profitable way to reach customers. Like, should you focus on ads or try different promotions or even adjust your product line based on the data? These are the strategic decisions that go way beyond, as you said, just balancing the books.
So the accountant is almost like a business partner now, helping to navigate this new digital landscape. And speaking of which, Budinho talks a lot about the rise of these platforms, how they're changing the entire game. These giants, Amazon, Airbnb, even Mercado Libre. What makes them so different?
It's really how they change the way businesses connect with their customers. In a lot of cases, platforms cut out the middleman completely.
And that has to have a ripple effect on accounting, right? How do you track everything, make sure things are transparent financially when you have this whole ecosystem on one platform?
It is a challenge for sure, but it's also a huge opportunity. Boudinho argues we need to fundamentally rethink our accounting systems, and not just the tech side of tracking transactions, but also our whole understanding of the economics of platforms themselves.
Okay, so let's break that down. What does he mean by the economics of platforms?
Well, in a platform-driven world, you can't just focus on tangible assets, the physical stuff a company owns. Think about Spotify, for example. They don't own record stores or CD factories. What's valuable to them are their intangible assets, things like brand loyalty, the data they have on their users, listening habits and all that, and just the strength of the platform itself, how it connects all those millions of listeners and artists.
So it's becoming less about what you own and more about the experience you create, the community you build. It's a fascinating shift.
And that's why Boudinho argues that we need new ways to measure success, ways that go beyond those traditional financial metrics. It can't just be about profit margins anymore. It's about things like customer lifetime value, so how much a customer is worth over their entire time using your product, not just that initial purchase. And he gives a really interesting example of this with a cultural project called Orsai. Have you heard of them?
The name rings a bell, but I'm a little fuzzy on the details. Refresh my memory.
So Orsai is the brainchild of this Argentinian writer, Hernan Casiari. They basically said goodbye to traditional publishing, no more big publishing houses, no distributors, nothing. They went all in on crowdfunding, getting their readers to directly fund their projects.
Wow, that's bold. And it really highlights what we were just talking about with platforms. By going directly to their audience, they've created their own platform, their own ecosystem.
You got it. And that's where the accounting gets really interesting.
Yeah, it's not as simple as just counting book sales anymore.
Right.
How do you even begin to track the contributions of what could be thousands of individual supporters?
It's a whole different ballgame.
And on top of that, how do you make sure everything is transparent, above board? Not just for the usual investors, but for this entire community that's bought into Orsay's success.
Exactly. And Boudinho really emphasizes that this model demands a whole new approach to financial reporting. It's not just about the numbers adding up. It's about communicating value, building trust with this whole new category of stakeholder.
It's like that line is getting blurry between creator, consumer, investor. We're seeing that everywhere these days.
Absolutely. And it means everyone has to adapt, accountants included. Speaking of adapting, Boudinho also dives into another major trend that's shaking things up in the accounting world, the subscription economy.
Oh yeah, subscriptions are everywhere now. I mean, streaming services like Spotify, Disney, software, even meal kits, it's the norm.
Exactly. And as Budinho points out, this move from one-time purchases to those recurring revenue streams, well, it has major implications for accounting.
So give me an example. What's a challenge that pops up with the subscription model?
Well, for one, how do you accurately recognize revenue over the lifetime of a subscription? If someone signs up for a year but pays monthly, you can't just record the entire year's revenue up front.
Right.
And then there's
Mm,
the issue of churn.
sure.
Yeah, churn. It's the rate at which your subscribers cancel. It's huge in the subscription world. And traditional accounting methods, they kind of fall short here because they're so focused on past transactions. Budinho points to something called the pay-year model as a more, I guess you could say, holistic way to assess businesses working with these recurring revenue
Okay,
models.
the pay-ADR model. Break that down for me. What is it and how does it work?
So PDR stands for Pipeline, Acquire, Deploy, Run, and Expand. And it really is about looking at the entire customer lifecycle, not just what's already happened.
So walk me through it. What do each of those stages represent?
Sure. The pipeline stage, that's all about attracting those potential customers in the first place. Acquire is about converting those leads into paying subscribers. Deploy is about getting those new customers on board smoothly. Run is managing the actual subscription service itself effectively. And finally, expand focuses on growth strategies, so like upselling or cross-selling.
Okay, so instead of just looking at the bottom line, the PADA model helps you understand each stage of a customer's journey and how it all ties back to growth. Pretty cool.
It is, and it gives you a framework to really measure and analyze the data at each of those stages so you can see where the strengths and weaknesses are and make smarter decisions. Like, let's say your acquire stage is weak. Maybe your marketing isn't converting free users to paid. The PIDER model helps you zero in on that and address it strategically.
So it's like having a roadmap, but it doesn't just show you the destination. It helps you figure out how to actually get there.
Exactly. And Budinho gives a great example of this in action with La Diaria, the Uruguayan media outlet. We touched on them earlier, the ones who successfully transitioned to a subscription model.
Yeah, how did they actually use the PADR model?
Well, they totally revamped their information systems, to deal with things like recurring payments and managing a much bigger subscriber base. But it went deeper than just the technology.
What do you mean? What was so different about how they did it?
Well, they realized that moving to subscriptions, it wasn't just a tech thing, it was a whole mindset shift. They knew they had to be more accountable to those subscribers, show them how their support was being used, the actual value they were getting.
Which takes us back to Budinho's point about transparency and building trust, right? It's like subscriptions require a different kind of relationship. It's less transactional, more like a shared investment.
Absolutely. And that's why this whole evolution, going from just compliance to strategy, it's crucial. It's not enough for accountants to just make sure the numbers add up anymore. They have to help businesses actually thrive in this environment.
So it's less about being number crunchers, more like strategic partners,
Right.
right? Helping businesses navigate this world of platforms, subscriptions, all this intangible value.
Exactly. They're becoming data storytellers,
Yeah.
helping businesses understand what the numbers are really saying, how to use them to make good decisions.
Which is basically Budinho's big takeaway, that accounting is becoming less about just compliance and more about being a driver of growth.
Yeah, and the great thing is that message, it applies even if you're not an accountant. I mean, we're living in a world where value is being created in new ways all the time. We have to challenge those old assumptions, embrace the new tech, and think strategically about how we measure and create value in everything we do.
Such a good point to end on. It's not about the numbers themselves, it's about the story they tell and how that story can help shape the future. So for everyone listening, whether you're up to your ears in spreadsheets or just trying to make sense of the digital world, here's something to chew on. How can you take this new way of thinking about value from tangible to intangible, from transactional to relational, and apply it to your own work, your own life? Something to think about. And on that note, we'll wrap up this deep dive. Until next time.